From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 30th, 2016. I hope you had a great weekend. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. The news calendar day for the first few days of this week is relatively quiet. And today we have a bank holiday in the UK and the US. I do not anticipate entering any new trades today, and the live trade room will be closed today and will resume tomorrow. So let's jump right into the charts here. As you can see down at the very bottom of the chart, I have three open trades. These are minimal trades left now. Closed most of the positions. All three of these are held over from last week. As we closed out trading on Friday, I went ahead and closed a majority of profit on all three of the positions, leaving just a minute amount left just to see if the market would gap in our favor over the weekend. As we can see, we're still just holding out just about the same place we were on Friday. And again, with the bank holidays in the UK and US, I don't anticipate a large change in the market today, but definitely something to watch for. I have, of course, protected the trades with the break-even stop loss or better into profit. And, of course, like I said, closed majority of profit on all three of the positions. So don't assume that they are new positions if you're just now looking at the market fresh for the first time here on the Prodigy Daily Analysis. So anyway, as we jump into the chart, of course, we're on the USD CHF. We have been studying this long-term down range here, the double red trend lines, bottom and top of the down range. We are above that. If you see the black box top right hand corner, that means we are above that downtrend channel or range. Let's go ahead and zoom it on down to the 4-hour time frame. We could see that last week we got above it. We began buying on dips into support. So that trade that you were just looking at on the Swiss franc down here, the buy from 98.80 or so, was at the purple shaded area at the bottom of that black box. Let's go ahead and zoom it in a couple of times. The trade was down here again, down towards this purple shaded area. Let me see if I can pull that over a little bit. That's where the trade was from. We're holding it now as it dips to the green zone. I think this is a very interesting setup here. The open and close, the breakout above the green shaded area, and now dipping back to it. Today and going into the first part of the week tomorrow, as long as it stays above there, I think we continue to look for opportunities to go long, targeting the parity level 1.0. That's all the way up in this pink shaded area, just peeking in at the very top of the chart. That would be our target for the current open position and any new add-ons that we put here for the US franc. So sitting above the green zone, maybe even dipping back down to the purple zone, we're buying, going long towards the parity level 1.0, the pink shaded area, all the way up here at the very top of the chart. That's the direction we'll focus our efforts in until the sentiment, the pattern of the trend changes. If it starts to create lower highs and lower lows, we'll change our mind about this currency pair. Taking it over here to the euro dollar, of course, we don't have an open trade here, but I do think that it's a very similar situation. We have the downtrend that we're following over the past few weeks. Here's something interesting, of course, is the red trend line. We've studied this in the live trade room, the red trend line, the uptrend. We're challenging that now. Last time we were here, we found support and went back up. We're right around the moving average as well again, here in the 100 period moving average, right into the current market price, and the down blue trend line into the red trend line. So, of course, we want to watch for reversal clues that it could go back up. But, of course, a breakdown here could send this even much further back down to the lowest lows, into the 106 or 105s down here at the very bottom of the chart. Again, we don't have a live trade, but if we're looking to get in the direction of the blue trend line, let's go with that direction for right now, because that's the current market direction. We're selling rallies to resistance or breaks of support, obviously last week, and today we are finding support at 111.00, the red line, green shaded area down here at the very bottom. We don't want to go short and sell it as long as we're finding support there. When do we sell it? We want to sell on rallies in towards resistance. So, of course, that would be close as possible back towards the pink shaded area, 100 period moving average. I think as close as possible, mid to upper 111s towards 112 becomes our opportunity. You just look back here to the left, you can see a little bit of support back right around this area right here. Let's call it 111.60. You see that back here on the very left-hand side of the chart, right around that line. Let's go ahead and change the color of that line real quick. Let me make it this blue color right here, so we know what we're looking at. Follow that blue line back and look to the left-hand side. You can see that support. So 111.60 as high as 112 become a potential resistance here for this currency pair in the direction of the trend. That becomes a selling or short opportunity, and only if it breaks back above there do you look for the market to turn around and start going in the other direction for the euro dollar. Moving on over to the GBP USD, Great British Pound US dollar. This one's been in both directions over the past several weeks. We saw the fall, the rise. Of course, we've been pushed in two different directions by two different things. We have the fundamentals, the data, the actual economic news, and then we have the Brexit polls that have been coming out and driving it higher. So we've been fighting back and forth. It's been a battle between the buyers and sellers. I haven't traded this currency pair in a couple of weeks because of that. But we see the fall from the highs. We actually traded it during this fall because we had the poor UK data, and then we saw the Brexit polls come out and it started pushing it back up again. So right now, again, I think we have a battle between the polling and the data. If we're going to focus on data, I still think we want to focus overall dominantly on going short here. At this point, it will need to break out underneath 1.4600. 146 seems to be a pretty decent decision zone here. Look back to the left, resistance, resistance, and now we're finding support. So 146 is our decision point. If it can break underneath there, I think we're back down into the orange shaded area down here towards the 145.40 level. If it stays above 146, as it is today, but that's to be expected with the UK and US bank holiday, we could even see another challenge back to the highs. And really, I think we're only looking for the uptrend to resume if we can get above this green shaded area in the multi-challenged high here. We see 147.20 to 35.40. You can see that green zone here and here. I think if it gets above there, then we look for a significant turn in the uptrend. If it stays underneath there, as is resistance, we could be looking for further moves lower. So watching the news will be important here for this pair. 4,600 today and even going into tomorrow will be an important level. Underneath it goes lower, above it could challenge the resistance highs once again for the pound dollar. Moving on over to the USD CAD, US dollar versus Canadian dollar. Zoom it out a couple of times. Previous downtrend, red trend line. Current trend is up because we see the blue trend line has been moving up. Only if that changes, we start to see lower highs and lower lows do we begin focusing on going short. Of course, likely we'll see some significant data out of the US and UK this month going into June coming up. We'll have likely non-farm payrolls, Canadian employment data as we go through the month of June. We have potential changes of interest rates. There's a lot of things happening this month that definitely would change our mind about this pair. But for the time being, we see predominantly uptrend along the blue trend line. Let's go ahead and take it on down to the 4-hour time frame. Of course, we saw the dip last week, the rise, now finding resistance right around the 1.3080.65 level. So that's a key area, obviously, right now of resistance support. If you're going to buy this, you of course want it to go lower first. Let's talk about 1.3000 as our potential support, the blue shaded area. So going long, you probably want to dip down to the blue zone to give you lower risk and higher potential reward. Your risk there, of course, is that it breaks down under the blue zone and goes lower. So if you're looking to go long, let it come down to the blue shaded area into 3,000. If you're looking to go short, you've probably already missed it for the day today into the 3,080 level, but the risk there, of course, is pretty minimal that it breaks back above 3,080, heads back up towards the highest highs here into the yellow shaded area. And of course, a break above that yellow zone will likely look for the continuation of the uptrend for this pair. Below the blue zone, below 3,000, we might look for the resumption of the downtrend for the US CAD. Moving on over to the USD JPY, similar situation. We had the downtrend under the red trend line, current uptrend along the blue trend line. So that's definitely weighing on our decisions, as currently the market is in an uptrend. Blue shaded area right here, 111.15 to 110.80 is the blue zone. It's challenging that now. I think if we can get above 111.15, we're likely looking for a turn in at least to 112, where the 100 period moving average sits up here closer to the 112s. We've seen historical support, resistance, and congestion all along this blue zone. The red circles back here show us support. We see some support right here the last time it touched the red trend line. Again, we are looking at this area right around or just above 111 as a key resistance. Let's take it on down to the 4-hour time frame. Look at this. We went into congestion or a little bit of a range here at the black box. Over the past several hours, we pushed through there and have continued to move higher. We were focused in on buying this currency pair last week, so we pushed above 110.35, now into the 111.15 level. Again, a breakout above 111.15. I think we're looking for it back towards this green shaded area in the 112 level. for the U.S. yen. Watching news will be an important thing here for this currency pair, but definitely watching the upside as the dominating direction right now for the U.S. yen. No real reason or excuse to go short right now. Maybe a breakout back underneath the blue zone gives you a little bit of a downside, intraday downside towards 110 once again here for the U.S. yen. Next, moving over to the AUD/USD, we are stuck in a range period of congestion. Of course, this is one of those trades that is held over from last week. You can see it going down here, 72.40. Let's go ahead and zoom in a couple of times. Now you see the downtrend, the blue trend line. Zoom in a couple of times. There's that black box. Where did we sell this currency pair? The top of the range, top of the congestion, and the top of the black box. If you're going to do it, that becomes your better opportunity. Lower risk and higher reward. Selling rallies into resistance. Don't sell it now. 1, 2, 3, 4, 5 days now finding support right around the 71.60 level. Terrible place to go short and sell it. You need it to go back up before it goes down. That's really the way it works the best. Let's go ahead and take it on down to the 4-hour time frame. Let's zoom it out a little bit here. So there's our range of congestion. Of course, we know that the yellow zone is a better sell. At least at this point, has not broken the black box. Well, I moved that around a little bit, the orange shaded area. 71.85 down to 71.60 or so is the orange shaded area down here. If we're going to see some more downside, it will need to open and close significantly, likely on the daily chart underneath there to go lower. So rally back to the yellow zone or break out underneath 71.60 to go lower. Otherwise, we could find some intraday support here. May see it take another rally back higher. I think we only start to buy this pair if it breaks above the yellow zone and starts to change the pattern of the trend, which clearly right now, just taking the last two highs, is a downtrend pattern. Lower highs is a downtrend. So that's what we want to focus our efforts in here for this week on the AUD/USD. And lastly, over to the NZD/USD, similar situation, not exactly the same. It's a lot of congestion here on this currency pair. It was, and if we look at the two red trend lines here, let's put two red trend lines in an uptrend channel. You can see between the two red trend lines, bouncing back and forth between them, but predominantly on the upside here between the two red trend lines. Now we've seen a little bit of a change, and I'm going to change the color of the trend line here to be a blue trend line. Let's change it to blue. So you can see now we have a little bit of a downward facing trend channel between the two blue trend lines. So I think that's the direction we want to focus our efforts in until, again, it breaks back above there and changes. But the downside, the blue trend lines, are what we're going to focus in on right now for the New Zealand dollar. Let's zoom in a couple of times. You can see the blue box here between. We found support at the pink zone, resistance at the yellow zone. Finally, last week, we broke under the pink zone, started selling it, and that's the reason we have the sell order still sitting from last week. Not extraordinary profit, but 35 pips is not too bad. 67.35 was the sell order. That is at, by the way, the pink shaded area. And of course, right now we're into support, so it makes sense to protect some profit if you are in that trade. What we need to see now is the breakdown of the yellow zone, 66.75, for any continuation lower. If it's going to continue to go lower in the direction of our current trend and direction, we need it to get underneath this yellow shaded area and the 66.75 or so level. Then we're back down towards the orange shaded area down here. If it turns around and breaks back above the pink shaded area, which is the top of our resistance right now, then we'll likely look for a change of this short-term downtrend channel, the blue channel, and maybe head back up towards the 6,800 level once again here for the New Zealand dollar. So right now, at least, we're focused in between the pink and the yellow shaded area. Selling resistance, the pink zone, break under the yellow zone, goes lower. And really only if it breaks back above the pink zone do we look for the market to turn around back higher. Once again, no trade room today because of the bank holiday, but I hope that gives you a little bit of a heads up as you begin your week of trading.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.